On July 4th, we're going to the polls to vote in a new government. And if you've been paying attention to the debates, there have been lots of points of contention, from migration to the NHS to taxation. In this video, I want to focus on the latter, taxation, and try and answer the question of, are we headed towards higher taxes in this country? Now, to do so, we're going to have a look at the party manifestos, see what they're saying specifically about tax. We're going to have a look at some of the comments coming out from the IFS. What do they think needs to be done from an economic point of view? We're also going to compare ourselves in terms of what highest level of tax do we pay when we compare ourselves to the likes of France, Germany, Sweden, Norway, Finland. How do we rank? So to start this off, let's jump into the manifestos, starting with the Tories around what they're saying about tax. Now, on income tax, there is no plan to increase income tax or change the bands currently. So that means that if you are a basic rate taxpayer at 20%, you can expect that there will be no increases to that tax rate. You're still going to pay 20%, but they're not going to change the bands. Now, this is something that is quite interesting because the thresholds have been frozen, right? But the thresholds being frozen because wages have gone up and wages will go up means that you're going to have more people paying more tax because you're across those thresholds. And that has a very particular impact for pensioners. By the time we get to 2027, I'm going to do a separate video on that specifically. But no change to the band sounds great, but it means that people will effectively move through the bands as we go along. Now, national insurance contributions. There is plans to cut national insurance contributions further. I've made a video where I explored the fact that they actually want to get rid of national insurance contributions altogether. And there was a question of what happens to the state pension then. But they've already given reductions to the national insurance contribution as a tax through the last two budgets. And that meant that the average household in the UK is going to be better off by about £900 per year. So further reductions to NI under the Tories. Now, this is where it gets interesting because you've got corporation tax here. Now, corporation tax isn't paid by individuals like you and I. It's paid by business owners and businesses. So I run a limited company. I pay corporation tax. What they're basically saying is their plan is to maintain at 25% with potential adjustments based on economic conditions. So that kind of leaves the door open. Potentially, there could be an increase to corporation tax in the future. Now, the issue that I have with that kind of thing is that, whilst they can't give a stone cast iron guarantee that they would never increase corporation tax, oftentimes when you increase the cost to do business, and tax is a cost to do business, right, technically, that cost is often passed down to their customers. And so if there is a future increase in corporation tax, it is likely it's just going to be passed down to consumers anyway. When it comes to business rates, they can continue with the current policy, but with potential reviews for improvements. So again, we're probably going to see some changes on there, but that is not going to impact individuals. It will impact businesses, and businesses may then pass it down to individuals. On non-dom tax status, in the last budget, Jeremy Hunt talked about phasing out the non-dom tax regime over a transitional period. They kind of got the jump on Labour, which didn't really go down too well. It was a point of conversation for a couple of days, after the last budget. Now, what are Labour saying? Labour on income tax are saying no plans to increase income tax or change its band. So similar, identical to the Tories. On national insurance contributions, they are saying they will not reverse the recent 2p cut. That's all they're saying. Now, you could read into that and say, well, that doesn't necessarily mean that there won't be any increases. We don't know right now, but their position is that they will not reverse the recent 2p cut. So could there be changes elsewhere? And when it comes to corporation tax, they're saying that there will be a cap at 25% for the first parliament. So again, kind of leaving the door open that there might be increases to corporation taxes a bit later on. Now, on VAT, they are planning to remove the tax exemption that has existed for private school fees. And the reason why they're doing that is to try and recruit new teachers into the profession. 6,500 is the number that is being bandied about that we need. Now, my partner is a teacher, and there is a lot of pressure on teachers right now in terms of the workload, being pulled into topics that aren't really your specialism. They need help. And the removal of that exemption for private school fees will mean that they'll be able to fund more teachers through. Now, that is a tax rise, that is going to impact people who are likely in that higher income threshold trying to send their kids to private schools. There is a debate around whether or not that's going to have an impact on state schools and that ripple effect down, but that's another conversation altogether. That's their position on VAT. Non-dom tax status. So what they're saying is they're going to scrap the non-dom tax status entirely, and that's going to generate additional income. Now that is going to be a positive thing, but again, the Tories kind of got the jump on them on this. Whether they'll adhere to a transitional period, whether they're going to do that within a relatively short period of time, we don't yet know, but that is their promise. Now on business tax, there's a roadmap apparently. They're saying that there's a commitment to publish a business tax roadmap within 6 months of forming a government, outlining plans for the duration of their first term. That sounds to me like there isn't anything concrete right now. They may just want to get into power to see what's going on and they can decide what might be appropriate at that point in time. Labour has spoken quite a lot about the need for us to try and fix our economy and try and get our economy growing. So I would imagine that feeds into it. Now let's have a look at the Libs, the Lib Dems. So on income tax, they have proposals to increase taxes on the wealthiest individuals. Now, I don't want to be a skeptic here and maybe go on and talk about clever wording, but the wealthiest individuals needs to be more definitive. What do they mean? I made this video a couple of weeks ago about the tax the top 1% of earners pay. And to be in the top 1% of earners, you need to earn £180,000. Now, I also shared the results of a poll on Instagram that I shared, asking people that if you're in the top 1% of earners on £180,000, would you be happy to pay the level of tax that they are paying currently as earners? So when they say the wealthiest individuals, what I'm hoping is that they're not just referring to the top 1% of earners. What I'm hoping they're referring to are the uber wealthy, which is defined by the top 0.01% of individuals generating vast amount of income through assets and investments. I'm hoping that's who they're referring to. It sounds good, but at this point, there are no specific plans or details around how they're going to do that. I know that they have spoken about tweaking the tax code slightly to enable them to do that. But there is nothing concrete right now to give us the information. Corporation tax, they support increasing corporation taxes to fund public service. And again, which is great, but will that be passed on to individuals? Now, they have got one specifically for wealth taxes. It says introduction of higher taxes on wealth to reduce inequality and fund public services. I think that will be a great idea. How they're going to do it, I would love to know. And on business rates, consideration to reforms to make the business rate system fairer, particularly for small businesses. I think when you think about it from an economic point of view, the companies that keep the economy going are not necessarily the large, massive conglomerates. They are small to medium-sized enterprises. And I think any help around trying to make business rates fairer for SMEs, small to medium-sized enterprises, would be welcome and it would benefit the economy overall. So that's what we know about the various parties, and I've only done 3 there, the various parties and what they're saying about taxation in their manifestos. The IFS, or the Institute for Fiscal Studies, is the UK's leading independent research institute. And I'm just going to read you a phrase from their website right now. It says, "Our world-class research helps policymakers and those that hold them accountable understand the impact that policy decisions have on individuals, households, and businesses." And it's been really, really interesting kind of following their commentary of what they think needs to happen from a taxation and economic point of view, even from when before the election was called. And this is something that they said, which I found quite interesting. And I'll pop this on screen. It says, "The IFS said whichever party wins the next general election, the government will have to choose between cuts to public services or increasing taxes to maintain current spending." Now, when you read that, and when I read that, I think just as a nation, we've been through austerities, we've been through cuts to public services. We know what that's like. We know that it's painful. But the alternative is that we either have no austerity cuts and we increase taxes. There was also another comment here, which brings me into the comparison that I want to make. Where do we sit when it comes to our European peers, right? When you look at Germany, when you look at France, how does our highest tax rate compare to theirs? And this is the comment. We want the public provision the Germans and the Dutch enjoy, but we are hesitant about similar tax levels. We ultimately need to tax more if we want to spend more on public services and to ensure debt does not continue to grow. That statement right there is a perfect encapsulation of the challenge our government faces. Now let's have a look at how we compare to our colleagues on the continent in Europe. Now this is from the Tax Foundation, and this is looking at, the income tax rates for the 36 major European countries. Now this is us, Great Britain. Our highest tax rate is 45%. Now when you compare ourselves to the likes of Spain, 54% highest tax rate. France, 55%. Germany, 47.5%. When you got to places like, Finland, right here, 51.4%. Right here, 52.3%. The only country that you could say that kind of is in this peninsula that has lower taxes is, the likes of perhaps Norway right here. But Norway is different because they have their sovereign wealth fund, which at the moment is worth $1.5 trillion. And when you think about what that translates to per capita, so per individual in their country, so they've got a population, I think, of 5.4 million. It translates to $278,000 per head. It's absolutely crazy in terms of a provision. Now, it's a huge contrast at this point in time in comparison to all of those countries that I've just listed there, in exception of Norway. We still pay the lowest taxes. So the way I see it, and I could be wrong, there are three choices that the government has. The first is to cut spending to public services. And let's be honest, we've been there before. We know what that feels like. And so for a politician to entertain this kind of conversation is hugely unpalatable for large swathes of the population. I don't think it is a starter, and that's why we haven't seen it in the debate so far. The second option is you borrow more money. So you borrow more money to plow into the economy, to put into infrastructure, to put into services, and hopefully that means that we can then get the benefit of economic growth to be able to pay back this debt that we've just borrowed, right? This money that we've just borrowed. That adds to the national debt. Our national debt is pretty high as it currently is. This is the number. And as you can see, look at how quickly the interest on this debt is racking up. The third is you raise taxes. Now, taxes are an income stream for the government. And let's make no mistake about it. Income tax, national insurance contributions at this point in time is the largest source of income for the government. It's 42%. Now, they can say that they're not going to increase income tax, they're not going to increase national insurance contributions. The issue with that is that you can try and increase all the other types of taxes, but they are minuscule in comparison to the income tax and national insurance contributions because you are taxing a smaller pool of people, companies, individuals. The pool is smaller. So when we talk about the fact that our country is in a bit of a dire strait right now, I think I heard on one of the debates that, I can't remember whether they were referencing the school system or NHS, there was a £10 billion hole. And that's just to fix what's going wrong right now, not to future-proof it. So what I think will probably happen is a combination of two things. We'll borrow more money and we'll raise taxes. And both of those things have their disadvantages. First is with borrowing money, you effectively add money to the national debt, as I've already mentioned. But if you don't increase taxes at the same time as borrowing money, you potentially have what happened with Liz Truss happen all over again, where you announce all of this spending that you're going to borrow capital for, but they're looking at you saying, well, you've not increased the tax take, your income, to facilitate the debt repayments. We have less confidence in the currency, in the pound. And this is where it's so tricky. And that's why I think that if they press the button to borrow more money, it will automatically mean increase in taxes. because you need to be able to show confidence that you can repay your debt. And if you keep tax receipts down by not increasing taxes, the confidence on the global stage is dented. And that will directly impact the pound. I'd love to know what you think. This is just me spitballing my thoughts ahead of vote day. Let me know in the comments. What do you think is going to happen? Are we going to be heading towards higher taxes? Is there a choice in this matter? Are the politicians just willfully not talking about this because they know it is a difficult conversation to have with us?